So, what was the plan? So we're gonna go over my strategy, how I trade. Most of you already know, but we'll do a review. I'll go through how to draw zones again, and then I have today set up my IB on the Mac. I used to use this a lot. I switched to mobile, but I'll still show you guys how I choose strikes and everything. Okay, that, and then we're gonna go through. Spend 5 minutes. Yeah, so we'll do that. Position sizing based on your account size, stop losses, and how to use my live chart. And if you have time, I'll show how to journal. Okay, let's get started. Discuss my option strategy. So if you've seen the YouTube video, it's gonna talk about the same thing. So I only trade SPX and SPY sometimes, and how I do it is I actually first try to identify the trend of Standard & Poor Index, what it's doing on a weekly chart. Then I go down to daily, 4 hour, and then I trade the 15 minutes. I look for entries on the 15 minutes chart and 1 hour for actual direction during day trading. But this exercise, I do it just to make sure I know what the trend is. And how do I do that is, so if you notice, market was uptrending from the March 2020 crash up until December 2022, early Jan, and then it started making what we call lower highs. So I'm gonna grab the path here. So that was the last high, and if you notice, we made a lower high here, lower low, and then at this point here we closed above the previous high. This is an indication of market trying to become bullish. It closed above, so we call it a bullish move basically. So if I continue down from this point onward, we made a lower low, a lower high, lower low. We skip that jazz because if you notice, I need like an abrupt move against the trend. If I'm coming down, I need abrupt move against the trend to basically call it a lower low and then a lower high. So in this case here, we're just going up. Like I don't see like a really strong, really strong abrupt move to the upside first and then down. So it's debatable basically, and too many candles stacked against light. So this is like consolidation, right? So again, we closed above. So we try to become bullish again. So this is above 41.91. So we became bullish here again, but then it didn't last that long. And then it became bearish again, which is here. So this was, you can call it like the previous high around 42.75. And then if I now do this, again, this is debatable. We're on a weekly chart, so that's why you see a bunch of these candles stacked together, but just for the purpose of exercise. And then this here tried to go above, but it got rejected. So we're still bearish up to this point. Okay. Lower low. And then this one closed above previous high, but how actually we're supposed to do it on the is this. So if you forget, so this is weekly, right? What you learn here will apply to the lower time frames as well. So I want you to focus here that previous lower high was this one. We closed above it. August 2022. We became bullish weekly. Okay. Now if I play this, if this is the low, 36.44, and this is the high, 42.78. And if I play it now, so at this point on this week, we closed below that. Became bearish again. Closes matter basically. We're looking for closes. Now, for market to become bullish again, we want to see a close above 42.73. I hope you guys know where I'm going with this. Here we go. We're going to try here. Price is trying, but it got rejected at like 4,200 approximately, and it came back down, right? So the point is, we never closed above 42.78, so we never became bullish. We closed below this, so we're still bearish on weekly time frame. Okay, so that's how I identify the trend. That's my technique, you can call it. And then on the daily, if this was the previous high, because we have lower high here, right? Lower high here, a lower high here, we closed above it, became bullish, right? And then the previous high was here, and then we closed above this high, 4087 in this area, so we were bullish there. But now, to know where we are now, you need to know what's your previous low. You guys with me so far? You will need to know where is your previous low, higher low. So if I was to draw it again, let's say this is a higher low, higher high, higher low. This is an abrupt move, so I'll still take it. Higher low, higher high. Okay, so if I zoom in now, this is my higher low, 39.98. We closed below it on Feb 24th, so daily became bearish here. What at this candle, right? And for this move here now, what is my previous lower high? Here. How I know that is doing the same thing again. Okay, so my previous lower high is here. For daily to become bullish again, we need to close above 41.50 on the daily, and so on and so forth. Okay, so far you guys with me? You know how to identify the trend now? Type some yeses or nos if you need some clarity. Okay, so that's how I identify a trend. Now, daily is still bearish, just by using the same logic I went through. This is your lower low, that's your lower high. To become bullish again, on daily, we need to close above 4050, okay? Now, weekly is bearish, daily is bearish. What's 4 hour doing? You guys tell me now, is 4 hour bullish or bearish? From what you've learned so far. Hello people, is 4 hour chart bullish or bearish? I'll give you about 20 seconds. Awesome, awesome. Everyone's saying bearish, so you guys are following. Why is it bearish? Because if this was the lower high, lower low, again a lower high, we never closed above this previous lower high at around approximately 4,000. Okay, price is trying now, needs to close at 4K, needs to close above 4K, okay, to be for 4 hour to become bullish. 1 hour is what? Where is the previous lower high on 1 hour? Is it this one at 4,008, or is this 39.27, or is it 39.13? So if I draw it here, so this is what I use in day trading, the 1 hour chart, right? So this is definitely a lower high. So this is debatable now. Is my lower here? Kind of, because then I have a big abrupt move at the top, which, or here, you can call it here because that's a wick, and then a lower low again, right? So now live market, it's live right now. At what point do we become bullish? Benji is saying 39.27, which is this one here. So if, let's say, 100% clarity, perfect close, perfect bullish move would be above 39.27, yes. But then some traders might, it's not an abrupt move. I mean, if you consider the wick it is, but that wick is actually above this, so that becomes a high, right? So we don't really go for wicks. We go for body close. So this is debatable. I would say better to wait for it to become bullish because the kind of selling pressure we have. Better to wait for 39.27 for it to call it a bullish move like this one here. You never know, it might get rejected here and it might get rejected here right now, right? That's how I think about it. And if I compare so the U at the bottom right now is curling up, sort of making a cup. The cup will be completed here. We might see some consolidation. If bulls come in, they'll do this. So let's say we go up to here now. We see some consolidation, the handle. We might see this if the bulls come in, right? As you guys know, I'm always prepared for both sides. So the answer to the quiz that I posted was 1 hour is still sort of bearish. It has not closed above even this lower high. For it to become bullish, I actually want to see it close above 39.27 like Benji mentioned. So I'm not really looking for longs right now. Scalping is fine, but not really a long. About shorting this right now, we are still below the lower high, right? So if you look for strong rejections, so the past, since the market has opened, we've got wicks at the top, right? We don't have big wicks at the bottom, we have wicks at the top. More of like bearish price action, right? At this zone. You guys with me what I'm saying? So if we had a close above 39.27 and we saw some wicks towards the bottom, like over here, look, wick here, wick here, wick here, huge wick here, small wick here, right? Price is trying to go up, but for the shorter side, if you look on the 15 minutes, we have wicks at the top and we have not made on the 1 hour a higher high, so the price is still bearish. Yeah, this move is nice, but I'm a patient trader, so I'm actually gonna wait for the price action to resolve itself, right? And then go long here. So this is what ideally what I would like to do. If the price comes up to here, let's say it makes a rejection, comes back down, goes up slightly, and then retest this zone, right? So, and by that time 1 hour will have closed bullish. I would enter for a long instead over here on this retest. Why? Because by this time I know price is already bullish, confirmation on the 1 hour chart, right? And then it will retest. So this will make a higher high, a higher low. You enter on the higher low. And typically what I look for is when I'm entering a wick at the bottom. If I'm going long, I want a wick at the bottom. If I'm going short, I want a wick at the top. With me? Guys, you with me? I'm not speaking too fast. Dill's saying, yeah, we're good. Anyone else? Any confusion so far? So what we've gone through so far, to recap, is how does Jazzy identify a trend on his chart, and what kind where do I look for entries? We have not spoken about exits yet, but typically all I do is if I'm looking for entry at a zone, in terms of my exit, I always enter multiple contracts, and on the first move up, I typically start selling 25% and 50%, and by the time I get to the zone, I'm all out, like the next zone. That's how I take my exits. It's always on the way. Like I don't hold for too long, and I'm always watching 15 minutes. So that's that. If you guys are good with this so far, I'm gonna move to how to draw zones. Wait, you take your first trim. Yeah, around. No, but 25% was the position sizing. So let's say I have 4 contracts. Okay, so let's say, where did we take puts? Where did we take puts on Friday? Oh, this is Friday? I don't remember. I called either this one or this one. I called this one. Yeah, I remember that. Okay, so I definitely remember calling this. Okay, so I called, to answer your question, I called puts here on Friday around $670 a contract. It ended up going to $18. Okay, so let's say I bought 4 contracts here. What I'm trying to say is, let's say the price I got filled, let's say I saw this wick and I got filled around 38.82. It's making this move. By this time, I have sold 1/4 of my position. And as the price is moving in my direction, I'm selling always. I'm not holding. Even better, I think, actually, because the way this moves. So by this time, so let's say around here, 25%, 50%, 75%, and then 100, you're gone, right? But price doesn't typically move like this, right? Price moves like we've had a lot of selling pressure. This is not typical. But look at this consolidation. Look how the price moved from March 7th, 1 p.m. until March 9th morning, right? That's how price moves sometimes. So if we're in a bearish downtrend and I'm waiting all day for price to reject off the zone to enter, right? I actually take profits along the way is what I'm trying to say. Okay, I don't hold from zone to zone like all of my contracts. Sell along the way. Okay, gotcha. Okay, cool. Now, how do I draw zones is the second topic. What time? 20 minutes so far. So let's get through this quickly. Let's get a clean slate because I don't want to mess with my zones. Oh, this is my old shit. Okay, new layout. So I typically draw my zones on 4 hours. Okay. What I'm looking for is supply and demand areas. Okay. And how I do that is this. You can watch Kevin's video to do that too. He talks about how he does it. It's actually a good way of doing it as well, but it's pretty similar actually. It's not rocket science. So I wanna see the chart where all the candles are clearly visible to me. Like I don't wanna draw zones like this. Because I don't see wicks, I don't see body closes. You guys with me? So I don't want to draw zones like in this view. I want to draw zones in at least this much, so where I can see what's going on with all the candles. Okay, if I need to jump into daily, I will. So so this here, you have like price projecting here, going up, same here, rejecting and bouncing and going up. Small bounce here, rejection here, a very small rejection here, not a big move, and then a rejection here as well, and now it's rejecting here. Okay, so if I was to draw and then what I do after that is because it's such a huge area, I will trim it a little bit. Okay, so that's one of my zones. That's around 39.15ish approximately, right? So if you now zoom into it, rejection, bounce, small rejection of 14 to like 20, still 15-20 points, not bad. Look at that bounce there going up. 2 bounces here, 1 bounce here. This, so yeah, I don't really count that. Around 3 to 4 points maximum, 15 to 19. Yeah, I just said it. 3 to 4 points max 5. So if I now go into, let's say, daily, okay, look for something obvious here. If not, we go back to 4 hours basically. So if you look here, right? So some daily closes will be wicks, but when you go to 4 hours, it'll actually show you much more. So let's say we want to start at daily, and at this here, we rejected, we bounced, rejected. Okay, so this level that we just drew, right? Look how far back it goes. July 2022. Huge rejection, huge ass bounce, huge ass bounce, huge rejection, bounce. Bounces, not much action here on this day. Rejection, this is still huge wick at the top, still rejection. Small bounce, bounce here as well. And now it's rejecting on that same level. What this tells us is that this area is of much importance to SPX buyers and sellers. Okay, so on a lengthy, not for day trading, on a longer time frame, if we were to get a move up like that and then retest of the zone, right? So for future traders, for example, you're looking to buy here, right? And now same thing goes for shorts. Price is trying to go up, rejects off the zone, comes back slightly. That was the first rejection, right? Goes back up again. So here you go. Plan for both sides. And then now if you go back down to like 1 hour, there you go. That's the plan. You go up, you come back, retest on the zone on the 1 hour, you enter for calls. Where's your stop loss? This is, so let's say price goes back up, comes back down. Your stop loss can be close below previous candle. So here. And then your target can be next structure. But you take profits along the way, of course, right? Or the next zone, which is not visible here, but like maybe here. Okay, so going back into zones. So this was our daily. I'm gonna go to 4 hours. So that's a strong zone basically, right? Now, because we need to trade daily, what I do here is I look for price action that's it's reacting to. So for example, too many rejections here in this area. Starting on November 22nd around 1 p.m. About 4 here, 2 here, bounce here, rejection here. So it's a good candidate. So I'll start drawing. And while I was drawing it, I realized even now, rejections here, bounce here, some consolidation on the zone, rejection here, and tried to bounce but didn't happen, and then a strong rejection here recently on 9th March, just past Thursday. Yeah, you guys following, or is it rocket science? Okay, so now, and so on and so forth. Awesome. Now I keep on doing this until I have areas of 10 to 20 point gaps. So for example, the stage I am at now in my layout, if you look on the right, so on the 1 hour chart, typically on an average, those zones that I'm drawing there, look, they're overlapping. See, so even if I delete all these and try it again, like I'll get there. It won't match perfectly. But then the difference between these is around anywhere from 15 to 20 points. Sometimes it's huge. So this one's a bigger one, 70 to 50, and you can see why. Look, there wasn't much reaction. Typically, if you go in the past and you see like a lot of consolidation, price will skip it. Oh, sorry. If it's a lot of consolidation, price will have a tough time getting through it. That's what I meant. Okay, so if I was to continue, there's some here. So if you notice, I don't really go for all wicks. I want to see body closes as well, because wicks will just like fall in the zone anyways. So I think this is a good area as well. We have some bounces here, a lot of bounces here, bounce here, some rejection here, and then bounce here, rejection, bounce, bounce, bounce. It's rejecting here right now. On Friday, I rejected here, and so on. Okay, and then I do this every. Sometimes I'll just go and delete all of them. Let's say 1 week the price action didn't work like that. I'll just go delete all of them and redraw them. But right now, if I get rid of all of these and then go back to my chart, and I don't see the need to draw them again because price is respecting these zones. Bounces here, rejections here, rejections here. Let's see what ends up happening here. Consolidation, rejection, 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 consolidation. Right? I don't really need to redraw them right now. Because a lot of people ask me actually on Discord that when do you redraw them? Like, I don't need to. Right? Because if it's working, why change it? Okay, so that was zones. Any questions on the zones before we move on? Next is how to select strikes for SPX and for SPY trades. Okay. Okay, I'll just let people finally got it so I don't have to copy your zones. Zone to clarify. Yeah, approximately 3 to 5 points. It's just a supply demand area, Dil. Yeah. Shouldn't, if it's like too big like this, 56 to 48, like 8 points, like I don't really, I should condense it, but I'm just waiting for the market to react to it, right? Yeah, keep it as small as possible, because then let's say you have, okay, let me show you why. So from here to here, let's say there's consolidation happening for 2 days, right? If your zones were too big, you won't be able to catch a trade for 2 days, which is okay in my book, but I know you guys like want to trade daily. Okay, zones is done. Now, this is usually my SPX trading setup. So I have chart of the actual SPX contract here on the left. This is the SPX index on the right. I don't really watch this because I'm watching TradingView. This is my option chain embedded inside my terminal. This is the interactive broker trader workstation. If you guys didn't know, have my watch list here. These are some old stuff I used to watch. I don't really watch them anymore. Sometimes I'll tap ES and ES appears on here on this chart. So I have SPX. So how this works is if I tap let's say if I tap Amazon, this is connected with that, and it should also be, oh, it's connected differently today. But anyways, let's say SPX are here. All the option chain is here for SPX, and my default settings are for all weeklies and quarterlies and all strikes. That's not your usually default, but that's these are my custom settings. It's what I'm trying to say. Because we're doing this on Sunday at 8:30 p.m. This is not live. This is all old data. But okay, how do I select a strike? And I always 99% of the time I'm always going 0 DTE, which is, so let's say if I was trading tomorrow, that'll be March 13th. Let's say the price tomorrow morning is, I'm sorry, getting a call. Price tomorrow morning is 39 or now 39.20. Okay, the first thing I watch is for IV. Look here, 18%. If IV is above, like Friday morning was 30%, I missed trades, if you guys remember. It was too expensive. I know people made money, but I wanted the IV to come down. I didn't want to pay too much for my contract. So let's be smart about it, right? Why rush a trade? So if the price is around 39.10, this is oh, this is live right now as well, actually. Yeah, SPX trades. Yeah, SPX trades in the evening too. 1 second. I don't like how. Typically, if it's at 39.10 and IV is around 18%, it seems like it's old data, but I just go like 2 strikes down, and this will be around $8 times 100, which is $800 per contract, right? So what I do is, let's say I want to go calls, I tap it, it appears here. The order entry box comes up too, but I don't really use it. It comes up this chart. I have hawk key set up. If I buy, it's gonna buy at market, right? And when I buy at market, appears in my portfolio. I'm not showing this purposely right now because it has my private information here, account numbers and all that. But so I just choose strikes, 2 strikes down from spot price. If I'm going puts, same thing, 2 or 3 strikes above the spot price. Okay, so that's what I'm doing. And typically it's around $800 to $900 per contract. If you want to risk less, you go further down or further up. The reason I go about 2 down is because of I want like some good delta. Delta tracks your spot price, and also the reason for selection of these contracts is the volume and open interest. Typically around 2 strikes down. Again, this is all old data, and this is right now 8:30 p.m. right? So you're not gonna have any volume here. Typically 2 strikes down is still good volume. So that's why I choose these. Okay, and then once you have bought it, I have an option to sell at market here. But what I do is I actually, when it appears here, it also appears here, or you can tap it to appear here, and then I try to sell on a limit. So for example, let's see if it lets me do it. So let's say I was in calls 39, let's say something realistic, 50, right? I'll go sell, choose my account, and then go limit and enter the limit price. So I'll buy at market, live on the chart, and sell at limit. In terms of position sizing, my account size for this is around $10,000. I take weekly profits out. I always take drawdowns, and I don't enter more than 2 contracts. So what that means is I use about, at a given time, I'm using about 15% of my portfolio to make around anywhere from $500 to $1,000 a day, and I take it out. So, and my risk is, so how do I set my stop loss is on the 15 minutes. It's actually very hard to do 10% stop loss on premium, but I do it slightly differently. Okay, so you guys need to understand this. So if you're entering close to zones, right, your stop loss is tight. That is the most important thing. If I was entering in the middle, it can go up or down. My stop loss is freaking huge. I gotta have a very high risk tolerance to be entering in the middle, right? But my risk tolerance is not that high. It's, you can call it moderate, not too low, not too high. Okay, so I don't want to lose more than 20% on an SPX trade. So if I'm entering 2 contracts at 1600, and if I'm hitting close to like $300 in loss, I cut it approximately. Okay, so if you look at this long short position, let's say we were taking a long position right now, right? And then your previous close of the previous candle is here or here, we'll take this one, and then you're coming at, so your entry is here. Typically, realistically, your entry you wanna enter here, but your entry realistically will be somewhere here, and then your stop loss can be here or here, right? So anyone who's, but if you try to do it here, you'll get stopped out pretty often. That's how SPX moves, right? So it's better to do it here, right? And right, so your RR in this case is about 1.6 basically. So that's how I try to do it. I'm just reading, this is all futures, but yeah, applies to options too. Okay, if anyone has any questions about how I choose my strikes for SPX, what my profit taking is, how do I take profits? I just covered how I set my stop loss. I don't set a hard stop loss. When I'm trading, I'm watching it live. So typically the best case scenario, Steve, is getting a perfect entry, getting a wick here, right? So the perfect scenario is you get the wick here, it's going up, you enter, and then as soon as that candle is actually large enough to go to previous structure, you take some off, goes to next level, you take some off, and it goes to the next zone, you get out, basically. If you are entering 3 to 4 contracts, zone to zone, let's say 4 contracts, the strikes I showed, you're probably making anywhere from $400 per contract to the last one selling at 700 to 800, right? So approximately that's like around $2,000 just for this move. I'll cover SPY shortly as well. Yes, I do look at, I just mentioned, Mo, that I look at option interest and volume. Because of my experience doing this for a while, I just go 2 strikes below spot price. So average buy is around $800 to $900 per contract, and same for puts. And the reason sometimes I just skip looking at open interest is because I already know the open interest. The times I trade is like 9:30 to 10:30. The volume's gonna be high, and then around afternoon session, same thing as well. Volume's gonna be high. Like I don't go way out of the money, like 30, 40 points down. I don't do that. Only as lotos sometimes on a Friday you'll see that. But typically, yes, you should look at open interest. But if you go around 2 strikes down, open interest will be high tomorrow morning. Do you choose strikes based? Yeah, okay. And then you got any links? No, sorry, I'm Canadian and we don't have access to TOS. But you can actually set this up. You can set this up on TOS as well. TOS is an amazing platform too. SPX fills are very finicky. Sometimes you get good fills, sometimes you don't. So I would recommend testing on a, if it's the first time trading SPX, go like at least 4 or 5 strikes way out of the money and test the contract. Don't go straight into like buying in the money, because if it goes against you, you'll lose like $400-500 in a few seconds. So be careful. Yeah, Toronto Dominion doesn't give us access. It's crazy. Do you have specific RR issue for which? Yeah, I mean it has to be minimum like 1.5 to 2, right? If it's just 1:1, you'll get 1:1 between tighter zones. Yeah, like here. You probably can't make much money between this March 7th and March 9th, but you can make tons of freaking money on this move, right? That was answer to Steve's question. How did you set that up on your Trader workstation when using the web platform? You just download this app and then you go into unlock layout. So everything is like draggable now. Like for example, I don't want this chart here, I get rid of it. And then go file, lock layout, and then you add windows from here. Let's say I want market depth level 2, it comes here. And let's say I want news somewhere, I can put news here, right? And then you just go file, lock layout, save changes. So that's the answer to rule of 42. Yes, I'll post this on YouTube. We're not done yet though. We have covered strikes. We have covered how to use the IB desktop app. I just went through position sizing. Do not risk more than 10 to 15% of your portfolio in a given trade. Have stop loss at a max of like 20%, but don't have a hard stop loss. Watch for zones to close. So, for example, you want candle. Let's say I was to go short here, hypothetically. You don't want candle closing above your zone, which is like, let's say 39.15. Close, I'm talking about close. Let's say some news hits. You're in a trade to go puts, to go short, you're in puts, and news hits and it just does this, right? You're just unlucky. That's all I can say. It happens sometimes. I don't win 100% of the time. I would say my win rate since last 3-4 months has been close to 80%. But what I try to do is I try to actually keep my losses small. And if you try to keep it close to 20% stop losses and you're getting like 100% winners, right? You can never lose, right? So that's the idea behind it. So position sizing, if you have like a $3,000 account, don't trade more than one contract. What you can also do is, let's say I don't want to trade, you want to trade SPY. So let's put SPY here. And you're doing 0 DTE, right? And then let's say you have $3,000 account, you can't put more than 15%. So your max position size is $450, and you're going 2 strikes down around 390. It's at $1, so you can buy 4 contracts. You guys with me? Yes, it is recording, buddy. Yeah, you guys with me? Yeah. So that's how I do position sizing. Like I round these off to like approximate dollars, so that way I'm not doing like some stupid 450 divided by 85. I'm doing 400 divided by $1. That's 4 contracts. That's how I do it. But I usually just do SPX because I know my average buy is around 800-900. My average sell is around 1200-1300. Okay, what's next? Position sizing is covered. We already covered risk management and setting for a stop loss. I just went through this. How to use my live SPX chart. So if I open this in incognito mode, so you guys have access to this. I'll post it here again. Okay, so I'm not logged in, right? So I wanted to just cover this because some people are looking for zones and everything, right? So, okay, you don't have that view. But anyways, so you can actually watch my chart live with zones and everything, just like this. So you're looking for, like we covered before, we're looking for a close above 39.27 to go long. And you look for entries on the left side. Okay, so this is a view only mode. You can't really do much here, but you can watch my charts live. If I make a change on the other side, it'll appear here. I think in real time. So let's say if I go back and this zone is at 39.30, I'll move it to 25. Look, I updated live, so you can actually use this live chart. Okay. And okay, before I go into journaling, any questions today, guys? Any other questions? If I haven't answered anything, please let me know. You guys know we covered how we identify a trend, how we draw zones, how we take trades, how we take profit, how we cut for a loss, what our stop loss is, what our position sizing is. I trade SPX, but you can use this chart to trade SPY as well, right? That's what we've covered so far. Is there any other questions before I go into journaling? Just let these two people type. So IV typically on a normal day will be like 15 to 20%. If you go, if it's 30%, that means it's a big news day. You can go under economic calendar on Discord. Or you can use any website. So if you go under economic calendar, on Friday it was Michigan Consumer Sentiment Index at 10 a.m. That's why it was high. It was close to 30%. That's why contracts were expensive. I don't remember if I traded it. I don't think I did. I was waiting for it, so I missed the first trade of the day. Like Kevin made like $200 per contract in the morning. He doesn't give a fuck about these. Nothing wrong with that. I'm just saying he's a much more confident trader. Yeah, it's just like asking, compile them. Don't tag me in Ask Jazzy if you have questions after. Just come here and ask questions without tagging me. I'll get back to you guys, okay? And journaling. So what I wanted to cover was for journaling. Let's say you have a bad day. Actually, even on good days as well. Sorry, not just bad days. Let's talk about our trade on the other day here. Let's say you took this trade. Let's say you took the puts with me. By the way, people who missed it, it was an awesome trade around. So this is how I trade as well. Actually, let me cover this quickly as well. So around 12:46, I posted I'm watching this development here. Then I said around 1 p.m. people will return from lunch and something will happen. 101 I said looking to enter puts for a scalp. So basically I'm giving you indication that I'm getting ready to enter. I'm doing that because by the time I do this at 670, in a minute it's gonna be $7.50 or $8. You guys with me? Why I'm giving you all these notes, or sort of like getting you guys ready to enter? Does that help usually? Yeah. So I'm doing that because by the time I actually put this down, you're gonna miss it. So that's why I'm asking you guys to get ready. Why do we enter? Because we're in a bearish downtrend, we're rejecting the zone, right? And then this ended up going to, I think my first sell was like 750. Oh no, 780 or $8. One of these was my first sells. Second 1150, and I was all out by 15. I didn't really get it. I didn't wait till $18, but that's what it went to. Okay, so that's what can happen, in one of these. And then, okay, journaling. So where's text? What you want to cover is reason for entering the trade, and you can just do this in Excel. You don't need to pay $50 a month for some nice ass journaling tool. Nothing wrong with that, but I mean, if you don't want to spend that money, just go to Microsoft Excel or Google Drive, Excel, Google Sheets, just type it in there. Reason for entering the trade, entry price, exit price, of course, number of contracts, and I'll tell you why. Number of contracts, P&L, reason for exit, did I take partial exits? What else? Okay, that's good enough. So, oh yeah, one most important thing. Okay, so basically you wanna, if you guys remember, we took this trade here. I just showed you on Discord as well. So you wanna write in your journal, why did you enter here? So my reason would be, we were in a bearish downtrend, price made a lower high, tested the zone, but I can't enter on this candle as per my rules. Also, sorry, on the 1 hour as well. This is, what time is this? 1 p.m. on March 10th. It's probably this one. No, this one. This one. Okay. So in your reasoning, it goes, it was rejecting a zone on the 1 hour, trend is still bearish, and the candle was rejecting the zone, huge wick at the top. You entered with a stop loss for a close above 38.87, right? So that's what you write in your reasoning for entering the trade. What's the grading of this trade? Is it an A, B, C, or D? What do you guys think? Is this, am I gambling by entering here? I want to hear your views, people. Is Jazzy gambling by entering here, entering puts here on this candle? No. So A is basically 100% perfect setup. Like, we're on a bearish downtrend. 1 hour is getting rejected. 15 minutes is getting rejected. We're trading with the trend. There's like a, let's say you have a double top or something. You saw an evening star pattern or a morning star pattern, right? I mean, there's multiple confluences is what I'm getting at. It's like an A plus setup, right? You have price momentum with you. It's a huge selling ass day, and you caught a move against the trend to go short, right? So AB, so definitely it's not, I'm not gambling here. C trades, grade C has a very low chance of working. So I would say this is an A or a B. I would call it a A if I had another candle here, like this one. Let me show in the, let me go in the past and see it. You know how there's sometimes like two candles rejecting from the same zone, like this one. So price came up. Let's say I missed this, rejected here. I missed it. This one, second rejection from the same zone and a bearish downtrend. That's like a A plus setup. So I would call it a A or a B basically. What do you guys think? What did you say? Okay. Only one person's typing. Okay. So reason for entering the trade, graded, entry price. So what was your entry for the contract? What was your exit? How many number of contracts you entered, and what was your profit or loss? The reason you want to do these four things is because then when you go back and read your journal, you want to know if you've been position sizing correctly. Sometimes some traders have a problem where they position size very low. I'm actually going through the zone right now. I'm actually just doing like 3 or 4 contracts. Benji knows me. Benji and I go way long in the back. I mean, in the past, I used to trade $50 or $100,000 account with, I would say, anywhere from 10 to 15 to 20 contracts at a time, right? But I took a step back. I was like, I want to go back to like a smaller account, test my strategy out, and see how that works, right? So when you journal and you read every week on the weekend, for example, today, and then it'll tell you, if you journal properly every day, it'll tell you that how many, what was your position sizing like, and every time you enter, let's say one day you enter 2 contracts, sometime another day you enter 4 contracts, another day you enter 1 contract, right? There will be a reason for it. Always, you want to put a reason next to it. So, for example, I think I entered like 2 contracts here. Why? Because the move had already happened since morning. If I caught, I think I missed this move. If I caught this move, this is like a 4 contract position sizing for me. Why? Because we're closer to the lower high. We're right at the top. This is probably early in the morning, 11:30. We have so much time, right? This is probably happening close to like afternoon 1 p.m. So I'm position sizing conservatively here, right? So that's my reason for it. So, but when you journal this, reason for position sizing, reason for entry, and you read it weekly, it'll actually train your mind to think, or train you to basically position sizing, like how to enter correct position sizing, basically. I know you're trading 52, but do you wait for the candle close to enter it, or you like enter 2.5 before it closes? Very good question. So Dill, like, I'm human too. Sometimes I get FOMO, right? So what I do is I cheat sometimes. I don't recommend this, but I go on the 5 minute then, and I start looking for multiple rejections. right? But the condition is 1 hour needs to show me that we're in a either a bullish trend or a bearish trend. Like I don't go against the trend. Okay. So to answer your question, um, it it's like this. So even the other day, yeah, okay. This is the answer to the question. We're in bearish downtrend. Has a candle closed below zone or previous structure? Typically, zones will be close to previous structures. Okay, so that's the structure here. This candle closed below previous structure. Now all you're looking for is this. Okay. So once candle has closed below previous structure, you don't want to enter here. Okay. Unless this candle looked like this with a huge wick at the top, you don't enter here. You wait for the next candle. So what that means is you've already waited for the close in the previous candle, right, Dale? You see what I mean? You're not waiting for close of this candle. You already waited for the close of this candle, which closed below your structure end zone. Now you're waiting for a huge wick at the top to go short. Yeah, awesome. Okay. So that was about journaling, and also write reason for exit. How many partial exits did you take? What was your last exit and why? So that will basically improve your profit taking. Okay, guys, that is all that I had to cover for today. I will upload the recording. If you don't have any questions within the next 20-30 seconds, I think we're good. Let's see. Would you be trying to buy? So look, Kevin, in realistically, you will not be able to catch the wick. It moves fast, right? Let's talk like practical. Like theoretically, yeah, Jazzy will say, yeah, I bought the right fucking top of the wick. No, it's not physically possible, not humanly possible unless I had a bot looking for that, right? So what actually gonna happen is after the close, which is a confirmation of continuation of the bearish downtrend, you're looking for a rejection of the top. So you want some sort of a wick. This candle actually was green, or I mean blue, when I entered, right? I remember that. I think I posted this. Where's members? SPX alerts or where's paid area? Oh fuck, here. So if look, here you go, blue. Why did I enter here? Because close below, rejecting zone, and I entered the wick at the top. I had confidence. There was selling pressure as well, selling momentum. I hope I answered your question. Do your rules of for lot sizes and apply for futures, or do you have Steve? Futures is slightly different, but in terms of stop loss around 10, no, not 10, 15 to 20%, yes, that applies. In terms of position sizing of the account, yes, that applies too. But futures work differently. They have margin requirements and all that, right? And you have leverage there. I think the futures account I have is like 1:100 leverage in terms of margin. So it works differently. I'll cover that differently. The rejection wick after the close, my man. Beautiful lesson. No problem, guys. Thank you so much for joining. I will upload the recording if you have no more questions. Thank you, guys. Have a great weekend. Weekend's finished, but yeah, okay. See you guys tomorrow. Bye now.